Good morning, ladies and gentlemen. This is Butch Shorak, Options University. It's Monday, June 17th, 2013. Welcome to Market Forecast. Access to this video is for educational and informational purposes only. Nothing contained in this video, website, or promotional material constitutes a promotion, recommendation, solicitation, or offer of any particular investment, security, or transaction. Options University provides educational services that are meant to teach you the risks and rewards of trading stocks and options. We're not a service that tells you what to trade. We're not implying or guaranteeing any profit. And as always, do not trade with money that you cannot afford to lose. Looking at the week that was, we certainly had a week that had some mixed news in it. And if we'll take a look at our different indexes, looking at the Dow, the NASDAQ, the S&P 500, and the Russell 2000 in that order, and we look at the numbers, we see that the percentage changes are for another continuing week in the negative numbers. Year to date, still awfully strong market as we had such a bullish first half of the year, but we see that year to date the Dow is up 15%, even though it was down 1% for the week. In fact, everything was down almost 1% or more than 1% for the week, as you can see from the numbers. NASDAQ up 13.4% for the year. S&P 500 up 14% for the year, and Russell 2000 up 15% for the year, when we finally had a bit of a stall. And of course that stall was caused by economic announcements. And so as we look at the next week, we certainly have some announcements coming. Last week was dominated by news out of Japan. It had to do with their FOMC, with their corollary to that. And as we see, what are we looking at this week? We're looking at some big announcements coming up. Very little coming out on Monday, but if we look at Tuesday, we got the FOMC beginning on Tuesday morning, and we got CPI, Consumer Price Index, coming out before the market opens. Housing starts sitting there before the market opens on Tuesday, and those are certain things that can move the market. Of course, there's the big daddy of them all with Wednesday at 2 o'clock. We got the FOMC meeting and being announced, and then we got forecasts coming out at 2 o'clock also. So certainly the Fed can change around the entire market. It has been highly responsible for this equity run, and once we get a change in some of the buying that they've been doing, we could see changes in what the overall market does. In the meantime, doubt causes problems in the market. Looking at Thursday, we see that we have jobless claims every single week at 8:30. This week is exactly the same, and we have existing home sales coming out at 10 a.m. and the Philly Fed coming out at 10 a.m. and economic leading indicators coming out at 10 a.m. So Thursday, big day in the market on a week that we're looking at what? Quadruple witching. So we got 4 markets this week that will have expiration and certainly can cause some fun and some volatility as we go into that big week in the market on Friday, June 21st. This is the week of quadruple witching. Looking at the SPX for the last week, and overall what we're looking at is we're looking at a market that has certainly been in an uptrend. We have broken down. We're sitting, keep bouncing off that 50-day moving average, but the overall trend is still up as long as we remain above that. But if you notice, we've kind of got a trading range that goes from about 1650 to 1600 at this particular point. As we move sideways, we may want to call this the summer doldrums. Also remember, with the economic announcements that we saw coming this week, we definitely have potential to have a change in markets. So a little more doubt in where we're going with this week. However, not a great deal is expected as far as announcements out of the Fed, but that remains to be seen, as you never know when the change in their stance is going to happen. Then looking at the week that was, let's take a look at the last 5 days. We see that we went into a downtrend. We had a pop-up on Thursday, nice pop-up on Thursday, and gave half of it back on Friday. As we're sitting, here's the 30-day moving average right at this level, and the 50-day moving average sitting at this level, and we're bouncing between those two numbers, not having any big move to the upside, not approaching our previous highs, which were there at roughly around 1689, right in that level. So we'll see what happens this week with the announcements from the Fed. Definitely could move the market, and that is the big news for the week is FOMC meeting. All right, with that thought in mind, let's look at the Dow, see what the Dow did during this week. Again, that same kind of movement out of it, going sideways. Dow looking a little bit stronger than the SPX as we're probably a little bit closer to that previous high up there. Dow closed above 15,000, down 105 on Friday, and we see that we're in a bit of a sideways move again. Big influence this week from FOMC. We'll see what happens. Looking at the NASDAQ, we see that we're in the very same situation, a bit of a sideways movement at this point, consolidating, trying to figure out what is the Fed going to do and what effect will it have on our investors and their confidence in our equity market. Russell 2000, let's see what that looks like for this last week. And again, we'll look at that. Nice sideways movement. Consolidating. This is the kind of market where you make money on strategies where the market's going absolutely nowhere. So you know how you can do that if you are able to work with iron condors or with spread trades. Certainly provides you a means to make money whether the market goes up, down, and or sideways. That's the advantage of being an options trader. If option trading is up your alley, remember with Options University we certainly have a means to teach you how to use these tools in order to become a better option trader, trading in all market environments. Now let's take a look at the VIX. We'll look at the VIX and we see that the VIX spiked up this week. You know, we've had some highs. That one was way back at the beginning of the year. Then we had a high there in March, and we had another pop up in between April and May, and about the middle of April. And here we are back up in that same level. No big spike, but certainly a spike up as we have a little volatility pulling back to our baseline of that 30 and 50-day moving average in this uptrending market. Let's take a look at the bond market, see what happened. As we see the market go down, we would expect that we might see some movement out of the bond market. Well, let's take a look at our favorite ETF to look at the bond market, the TLT. There it is, TLT. And we see, look at it, it's down at, look at this, yearly lows. Bond market not really reacting to the moves out of the stock market. So bond market's been in a downtrend and seems to be sitting in that downtrend. Should get some kind of bounce if the market pulls back, but you know what happens as we change interest rates with the Fed, that'll affect that overall bond market. And let's take a look at that safety haven called gold. GLD is the ETF we look at for that, and we see that we're trading sideways, but we're at yearly lows with decreasing highs. We call this what kind of a trend? You got it. We've got a downtrend. And we've certainly got a descending triangle. Is it going to pop up or is it going to pop down? It's probably going to pop someplace as we see this range getting smaller and smaller. And we know one thing will happen. Nothing remains the same. And it's going to go one way or the other. So gold could be that safe haven if we see a big pullback in the market this summer. So far, no reason for that to happen. All hinging on what is the Fed going to do? Looking at volume for this week, as we saw the market have a bit of volatility popping between the 30 and the 50-day moving average, we see that our volume was right up there. Nice strong volume for the week as we saw more interest in the market. In fact, we've been looking at greater volume in the market during the last month as the market has basically been going sideways. So a little bit more action taking place and more volume in the market than we saw earlier in April and May as it kept heading up higher and higher and higher. All right, with that thought, that's kind of the market that was during the past week with a little bit of a preview as to what we expect to have coming in this week. Again, hinging on the Fed. And with that thought, let's take a look at the financials. XLF. There we are, XLF. Our ETF for the financials, hanging strong, never even got near the 50-day moving average. Strong overall relative to the overall market as QE3 puts us in a position where it's favorable for our banks to make some kind of rebound. from the devastation of 2008. And finally, let's take a look at oil and see what oil has done during this week. And we're looking at USO, our oil fund of ETF, and we see that oil popped up and basically popped up through some previous resistance, and now sitting at resistance from April. Hasn't quite hit that level yet, but it's getting darn close. We'll see if oil actually pops up through that level of the last 3 months. So with that thought, this is Butch Shorek, and for those of you that are gold members, stick around. We'll take a look at our stocks to watch. For those of you that would like to see more free videos from Options University, go to www.optionsuniversity.com/free gold. With that thought in mind, thank you, ladies and gentlemen, for being here. This is Butch Shorek, Options University. It's Monday, June 17th, 2013. The FOMC is here. Enjoy your week.